Hello everyone and welcome back to a brand new video on bar chart. My name is Ryan Rosbiani. I'm going to be the host of this video, but before we get started, I'd like to read you the disclaimer. None of this is meant to be financial advice. A little background on me. I'm your host, Ryan Rosbiani, and I've been trading for 5 years now, a little bit over 5 years now. September was my 5-year anniversary. I've been learning about the stock market and economics since the 12th grade of high school, since senior year. I've been fascinated about it and I've learned a lot about it and I've studied it a ton. I've got a Twitter page that I cover a lot of data about the stock market and economics on. It's at Ryan Rosbiani. And I also have a YouTube channel where I do weekly stock market reviews of the economics of the world, the stock market. I do stock market analysis of whether individual stocks or overall stocks. All that stuff can be found at ryanstocks.com. You can see that here. On my second link on there is my YouTube. So you can definitely find all that stuff there at ryanstocks.com. It'll also be in the link down below. So the key to today is I want to teach you 3 of my favorite studies / indicators that I use when I'm trading. This is for day trading, for long-term swinging, for swing trading. That's trading over a longer period of time, and as well as investing. Sometimes you want to use these tools for investing and looking for great entry points on the stock. Again, it depends on the time interval that we're using. But the key to this video is teaching you 3 of my favorite studies for the stock market. The first one, you've probably heard of a moving average, but this one is called an exponential moving average. So a moving average takes the average over a period of time, so that's the number of candles there. So a 50 moving average takes the most recent 50 stock candles. So whether if it's a daily chart, takes the 50 recent candles and divides them by the average price equivocally. Each candle gets an individual bearing, and then a point is created on that line that you've seen when you activate a moving average. An exponential moving average is slightly different. It's a type of moving average that places a greater weight and significance on the most recent data points. So if there's 50, the most recent chunk of those has a higher weighting. So if you remember back in the day when you would take a test or an exam in school, they'd be like, this test has a higher weighting. So if you're taking 4 tests, the 4th test could be worth 50% of your grade, and the other 3 tests are worth the other 50% of your grade. Exponential moving averages work in a very similar way. The most recent data points have a higher weight put on them. That's why they're important. This line or this moving averages can be over different periods of time. 9 EMA, 10 EMA, 15 EMA, 100 EMA, 200 EMA. The same thing you do with moving averages, it can be applied here. You can choose it. My favorite ones personally are the 9 EMA, the 50 EMA, the 100 EMA, and the 200 EMA. The ones that I use on a day-to-day are the 9 and the 50 EMAs. Those are my 2 favorite ones, which we will discuss later on time. The reason for that being is the 9 EMA is a short-term window for the stock market is going, and the 50 EMA is a medium-ish, a short to medium-ish term that it's going. So for day trading, I love to use both of those. Now, if I'm going into longer-term swings and stuff like that, I will incorporate the 100 and the 200 EMAs as well. So EMA, of course, by the way, stands for Exponential Moving Average. So that's very key to know going into this. So EMA, when people say EMA, that's Exponential Moving Average. This line can be used as a support point as well as a resistance point. Sometimes these can be a support point that you hold for a long period of time. Sometimes this is a resistance point that your stock hits and keeps on rejecting. So that's kind of what you're watching there. The point of a lot of these moving averages and exponential moving averages in different lines that are placed and mapped on these indicators are to provide you with a support and resistance point, which leads us into our next one, which is VWAP. VWAP stands for Volume Weighted Average Price. It's a measure used in technical analysis of securities average price over a trading period. The simplest and easiest definition for VWAP is to think about it as the fair price for the stock. That's what a lot of people call it. If you're way above VWAP, ooh, this is overvalued. If you're way below VWAP, oh, this is undervalued. And sometimes it can be the magnet point that the stock goes to. It's a technical indicator that's used mainly for intraday trading. This is not on the daily chart and should not be on the daily chart. It's the daily chart, the weekly chart, and so on and so forth are the data points that cannot be done with VWAP. VWAP is for intraday trading. It's for day trading there. So VWAP appears as a single line on your intraday chart. It looks similar to moving average, but it's much smoother. VWAP represents the view price of action throughout the single days of trading sessions. Retail and professional traders will use VWAP to help them determine the intraday's price trends. It's a trend line, just like EMA, like MA, but it's a little bit smoother. And VWAP is most useful for short-term trading, for day trading. So you can't use it for long-term investing, unfortunately, but VWAP is a good one for when you're doing your day trading or your swing trading intraday. And I consider more day trading for quick in and out, and swing trading is intraday that I like to use for when you're holding it throughout the whole day. Okay, so VWAP is a very important one. Very similarly, it uses volume, it uses price to do these calculations. There's a formula, and it does not operate outside of trading hours. So during extended hours, this thing is turned off. So just kind of remember that. VWAP should not be moving during extended hours. The third one, and one of my favorite ones, is RSI. This is very important, especially when stock markets are volatile and moving significantly up and down. RSI stands for Relative Strength Index. It's a formula that's used to kind of calculate. It's a technical indicator. It's a stochastic indicator that's used in momentum trading that measures the speed of a security's recent price changes. It's a range from 0 to 100. If you're over 70, you are overbought. If you're under 30, you are undersold. This is a range that you'll see there on the charts. It'll be above 70. Is you're overbought, under 30 is you're undersold. This is a key thing that's used for people that are looking to find a pop. This was introduced in 1978. The RSI it provides technical indicators with a signal about bullish and bearish price momentum and is often plotted beneath the graph of an asset price. An asset is usually considered overbought over 70 and oversold under 30. The RSI line crossing below overbought or above undersold line is often seen by traders as a signal to buy or sell. The RSI is best for trading in ranges rather than trending markets. So again, it can be used for day trading and swing trading, but I do still like to use this for long-term investing as well. One caveat to the RSI to keep in mind is that the RSI, you can stay into overbought and oversold for an infinite amount period of time. You are not guaranteed a bounce. So do not, the second this thing goes into overbought and keeps going into overbought, do not be like, I want to buy puts. It's time for me to do this. You can stay into overbought or you can stay in oversold for a long period of time. You are not guaranteed a bounce in a window or a time period. So you can stay in overbought for months and then finally come down. You can stay in oversold for months and then finally bounce. So that's why you need to kind of take into account all the other conditions out there. But it's a good window or an envelope for looking to take profits personally that I like to use when I'm day trading, right? That's the thing that I like to use. Also, one thing to keep in mind, this might be a little bit more advanced, but I'm going to throw it in there just slightly. There's things called divergences in price action versus RSI. Since this is a oscillator, these are oscillators, not indicators. So this oscillator here will allow you to kind of see this. If price goes up and your RSI is coming down, that's bearish, if you can catch that. And if price is coming down and RSI is going up, that is sometimes considered bullish. So I just want to throw that in there to kind of keep you updated and share that with you. So taking a look at the chart, we're back here on the full bar chart window here. I've got Apple loaded up. I've got my 60-minute candles loaded up here. This is the hourly chart. I've added my VWAP. I've added my 9 EMA. The pink line is my 9 EMA. The green line is my VWAP. And my RSI here is down here in this window. And as you can see here, the cool thing about our friends at Bar Chart, what they do is if you go into overbought, the stock stays blue. If you go into oversold, it is red. So you have your RSI down here. And I like to do it over a 14 period. So this is over a 14 period. You can always adjust this, but this is the standard window that is used for RSI. You can also adjust your oversold and overbought, but again, we're staying in the normal part, and center is 50 because the range is from 0 to 100. So then you have your EMA. I have plotted the 9 EMA here, the 9 Exponential Moving Average. So this is what I'm using, but if you want to adjust your period, you can change it to 50, and you can also obviously change the color. I like using pink for my 9 EMA, blue for my 50 EMA, so on and so forth. So what I'm going to do is I'm going to actually show you how to add these by adding the 50 EMA. So we're going to go to Exponential. There we go. And then you can change your period to 50, change the color to blue, and add it to your chart. You can see here now you have your 50 exponential moving average here. And you can also adjust your time window periods here as to how long you want to see it. Intraday, 5-day, change your windows here. And you can also add, there's a plethora, like literally so many different studies you can do. And then also you can add some fundamental stuff to your chart as well. So it's a powerful trading chart platform as well. So this is really good. So if we can go through an exam, we can go through this literally together to see all that stuff that we discussed. You can see here that I will start with my VWAP. You can see our VWAP for the past few days, ever since things have been going very well for the stock market at the time of this video. You can see our VWAP has been kind of a support point. Then underneath it, you have another support layer for the 9 EMA. Then you have the 50 EMA down here as support. But as discussed, these can also be resistance points. As you can see here, for this time period right here, for 11.2, this was acting as resistance. The 9 EMA would hit and reject. The 50 EMA would hit and reject. Look, 9 EMA hit and reject. Then we finally broke through. Didn't break through. Breakout was a failure. Came down and rejected again. And then we got some good data and everything just went complete bananas for the past 2 days. So that can be seen there. But you can see that the point of these EMAs are to act as support and resistance lines and trend lines. So you can watch them. Same thing with VWAP. And that's why I really like them so much. And I've found that simplifying my day trading or simplifying my swing trading to just a handful of indicators. This is literally the same setup that I use. The only difference is I would add volume. So if we were to add volume here, that would be my parallel setup to what I like to use for when I'm personally day trading or trading throughout the day. So that's why these tools are so important. You can use them throughout the day and you can back test and see how this works for you. I found simpler setups have been the most simpler thing for me. Here you can also add some more stuff to your charts. You can turn on extended hours. You can change your scale from logarithmic to or percentage. You can add events. I like having dividends, earnings, and splits on here, so you can see Apple applied their dividend just a few days ago. They had earnings just a few days before that, so you can track all this stuff here. But again, my 3 favorite studies that I like to use are the exponential moving averages. I like to use the 9 and the 50, VWAP, and RSI. These are my 3 favorite ones there. Again, thank you so much for watching this video. I'm your host, Ryan. All my links to all my stuff can be found at ryanstocks.com. Links down below. I appreciate you all for watching this video. Thank you to Bar Chart for allowing me to make this video, and I hope you learned something. Let me know in the comments down below what some of your favorite trading indicators are. All right, see you in the next one. Bye-bye.